Hello, everyone, and welcome into Crush the Street. I am Kenneth Amaduri, and what a treat. We have Jeffrey Tucker on the line, returning guest, one of the leading voices in Austrian economics and sound money. He's with the American Institute for Economic Research. Jeffrey Tucker, thank you so much for coming on Crush the Street with me once again today.
Sure, it's nice to be here. Thank you.
Jeffrey, we've had the illness. We are looking at the U.S. burning down, riots in the streets. Experts are saying 42% of jobs aren't coming back that were lost during the crash. In a 70% consumer-based economy, this does seem like a big deal. Now, before we hit record here, you were telling me some interesting information regarding asymptomatic spread and the virus, some results coming from the WHO. Let's talk about that and then switch over into how this is all impacting the economy and our freedoms.
Sure. Well, I mean, the reason for the lockdown initially they claimed was to flatten the curves, they said, to preserve hospital capacity because, the hospitals were going to fill up with all these sick people. That turned out not to happen. There was about 48-hour period where a couple of hospitals in the Bronx were at capacity, but for the rest of the country, what happened was the opposite. The hospitals emptied out. 250 hospitals have furloughed workers because all the governors put restrictions on elective surgeries and diagnostics, and then also the public was afraid to go to the hospital because they didn't want to get COVID from the hospital. And plus, you don't know. I mean, it's like people got really scared because they don't want to be declared, positive for COVID and then be contact traced and, have your family harassed. And, so people just stayed away. So the hospitals emptied out. So that was the reason for the lockdowns. So they said. And then after that fell apart, they said, well, we still have to stay locked down because, you can spread it asymptomatically. You can be perfectly fine, healthy, but half the people don't have symptoms, but you can still cause the death of other people. So you're like a killer if you go outside, during the lockdown. That's the same as killing people. And that was the claim for a very long time. It was all pop folk wisdom. There's never evidence of this at all. And so the World Health Organization yesterday came out and said, oh, it turns out asymptomatic spread is extremely rare. Well, that just lit the internet up on fire because these days everybody's bored of COVID-19. Nobody wants to talk about it. Everybody's so over it. But that made people really angry because it means that there's no basis for social distancing and locking down and closures and limits on conference sizes or keeping theaters closed or anything else. It just totally destroyed it. So then today, now the World Health Organization got scared that it went too far with this very rare statement and is saying, well, there's still a lot to learn. Yeah, there's always a lot to learn. That's what science is, and that's why you don't want to lock down an economy, so that the face of uncertainty, you're supposed to keep things open, keep life functioning normally. This is a scandal for the ages, and from an economic point of view, the weirdest Great Depression, and I think it's probably going to be the shortest, that's ever happened in the history of humankind, actually. And it was all done as a social experiment, essentially, by some computer science modelers who just wanted to try out their new lockdown closing models on the next virus that came along. COVID was just a nice, convenient excuse for them.
So what do you suspect was the purpose of the social experiment? I mean, is this for something greater down the line, an economic breakdown? Because it does seem like they're inching us along. We're getting bandaged along here with the trillions of dollars of stimulus. So it doesn't seem like we're seeing a material fallout that's hitting Main Street in a way that I guess is on the headlines anymore. I mean, obviously there's a lot of people that are struggling, but then, the stock market's going up, so everything feels fine.
Sure. Well, I think the economy was largely healthy back in January and February. It wasn't, there's always problems. We've got a debt overhang. We had a bad Federal Reserve policy going on, protectionist trade policies. And there was a lot of people who were playing games out there with markets, and so there's a little bit of fragility in the economy. But it wasn't. I don't believe we were ready to crash or anything like that. I'm not of that view. It's just that with the suppression, the lockdowns, of course, everything got destroyed. And then it became a great excuse for Congress to spend trillions of dollars and for the Federal Reserve to buy everything in sight. And It just became a great excuse for a bunch of bad policies. But I'm not really of the mind that this serves any larger purpose, actually. I really do think, and I've done a ton of research trying to reconstruct how this whole nonsense began. It really did begin in 2006 when George Bush asked the State Department of Veterans Affairs and some other department, the Homeland Security, blah, 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 for a plan for how to deal with bioterrorism. And so they put together basically a computer model in which we all just kind of drop in place, live in a refrigerator box and get food delivered to us, for 3 months, and then the virus goes away. It was bad medicine and basically a totalitarian plan, but it was never, and it was written into the CDC's plans for the next pandemic, but nobody believed that it was actually going to happen. I mean, this all comes about as a result of basically a high school science fair project by Sarah Glass and her father Robert Glass, based on a Cootie's theory of viruses, and it had a couple of champions like Carter Meacher and a few other people, and they're computer modelers, not medicine men, and George Bush was very impressed by their PowerPoint presentation, and so he ordered the CDC to write it into the law. And that was in 2007. So that's when they first started talking about closings and this kind of stuff. They could have done it in 2009, with a bug that came along that year, but everybody was distracted by the latest financial crisis, plus Bush wasn't president anymore. So they had to wait until the right moment. So when the coronavirus came along, all the same gang of weirdos started screaming at the top of the lungs on an email chain to public health officials and government officials, and whipped up a bunch of hysteria. And then a bunch of bad models came out of the Imperial College London, from Neil Ferguson saying, oh, millions of people are going to die. The New York Times, February 28th, ran a podcast in which their top virus reporter predicted that 8.25 million Americans were going to die. He said that you will have 6 friends who will be dead soon. This is the New York Times. Yeah. So panic ensued, shut down the schools, and of course you have to shut down the malls and the theaters, and then you have to shut down the workplaces because now there's no place for the kids to go. And just one thing after another tumbled, and over the course of 3 days, almost the entire country locked down in a state of frenzy. Trump banning international travel. The whole thing has just been insane. And of course, everything, the market's just tanked. But now we look back and I think it's almost universal opinion right now, except for a handful of governors. I happen to live in Massachusetts, and he's one of them, that thinks this whole thing was a huge disaster and a big mistake, and we should have never done it in the first place. So what you're seeing in the markets right now is a reaction to the opening up and to the perception that now that we've done this terrible thing, we're going to reverse a lot of the policies and go back to where we were. So of course the markets want to rise just like they were before the lockdowns.
So you're not surprised by the snapback we've seen. We've obviously had a tremendous amount of stimulus. The Fed truly exemplified that they will do anything and everything to combat an economic problem. So I guess what my question is, what does the next crisis look like? If we have this situation now, we saw what happened in 2008, and what's the next one look like?
Yeah, let me just say, one of the great things that happened over the last 3 months is we didn't have any fundamental liquidity problems in the financial markets. They never shut down, and the money continued to work. So there wasn't a monetary financial angle to this, and thank God, right? I mean, for a while we couldn't get toilet paper. A lot of people lost their jobs. A lot of businesses are going to be shut down and so on. And it was tremendously annoying and even totalitarian, but at least the money didn't fail on us. So that's great. I'm not so sure about the next crisis, however, because the Federal Reserve now has a problem because it owns massive amounts of assets that it should never have purchased in the first place. They've gone way out the bounds of their mandate at this point, pursuing unprecedented amounts of buying with fake money. And they're going to have to sop up that liquidity somehow. That could prompt a reversal of the upturn in the markets and could actually prompt something like a liquidity crisis in the market. So that's going to be interesting. That could happen sooner rather than later. I'm talking about maybe early next year.
Jeffrey, what do you think about gold in this environment? On Friday, we saw an 830-point update in the Dow Jones, and in the face of that, gold got slammed. I mean, you see that resilience in the
Sure.
stock market. Gold is a crisis hedge, so people see
Yeah.
it as an opportunity. That they don't need it. They don't need gold when the stock market's going up.
Yeah,
Um,
the gold is a really important asset for people to own, just because, as we see, crises can happen, real or imagined. So, gold is a perfect hedge against that. I'm not saying you're going to make money from it, but damn, it's a good idea to have it, and especially in physical possession. Everybody should know that now. So I'm expecting that over the coming year, people will have learned. I mean, you think about it, all the advocates of gold have ever said is you need this as a safe haven. You don't know what could happen. Something terrible could happen. It could be an asteroid, could be a pandemic, could be a financial crisis, whatever it is, gold is a reliable hedge. Well, for a long time, people didn't really believe that the apocalypse could come. And so there wasn't that much need for gold. But over the coming year, we're going to see people really traumatized from these lockdowns, realizing that they need to save more money, have some gold on hand, look for some safe haven assets, and diversify your portfolio in a way that also includes things like gold and Bitcoin and a lot of cash on hand.
Well, I'm kind of worried that this propaganda of the stock market going up, which if people can manage their expectations, they can understand why, um, is going to be a dead weight on gold, and people are going to give up on gold, and they're going to forget about the reasons to own gold because of how quickly the stock market responded after, a record crash.
Yeah, well, as long as people understand that the reason it crashed, I mean, this is, you know, there are a lot of people who are saying, oh, the market was waiting to crash anyway. COVID was just the excuse. I don't really believe that. I think the market was not ready to crash. I think it was a completely artificial crash imposed by lockdowns and fear. So, a savvy investor is looking at bargains out there over the last several weeks and buying like crazy. And so now we're just seeing a restoration of the status quo ante. But I do think that we're going to see an increase of interest in gold over time. I don't think it's going to be, I mean, maybe in the short term, you're going to see this back and forth uh, indirect relationship between gold and stocks. But I think over the long term, this has taught us the need for a safe haven. Now, as for Bitcoin, some people have been disappointed that it has not gone to 20,000, 30,000. But, if you get rid of the to the moon expectations for Bitcoin and you look at how it's actually performed over the last 3 months, it's done spectacularly well, actually. There was no chance that Bitcoin could ever be shut down. There is a chance that stock markets could have been shut down. They weren't, thank goodness. But Bitcoin, I mean, it doesn't matter. You can't shut it down no matter what. It's performed extremely well over the last 3 months. It's maintained its value and actually increased its value. So I'm bullish on Bitcoin, not in a put all your money in it, you're going to be a billionaire by the end of the year. I don't believe that. But what we've seen over the last 3 years of Bitcoin is it has achieved a certain level of price stability, with an upward movement gradually in this staircasey kind of way. And I think we can expect that to continue. Not dramatic increases, maybe not even as many returns as the stock market, but gradually. So it's emerged as a safe haven.
Jeffrey, talking about this artificial crash that we've seen, real damage has been done, though. And I think you'd agree with that. I don't know how quickly people are going to be going back to the movies. I don't know how many people are going to be going back on cruise ships and going back to Disneyland and flying on Delta over the next year. And so much of the economy is dependent on that max capacity
Yes.
operation. So, what are your thoughts on that? That, we're not going to have that fundamental consumerism operating at max capacity for the next 12 months as maybe we would have expected if we didn't have this COVID crisis.
Yeah, I think that's right. I mean, one of the reasons people don't want to fly right now is that people are just scared of official places. And it's not scared of being sick. It's just scared of encountering scary people with uniforms, taking your temperature and making you wear a mask and all this crap. Nobody wants to fly with a mask. So that's why rental car prices are going through the roof right now, because People are renting cars and going on trips. They don't want to fly. So they'd rather drive for 2 days than risk it in an airplane. So airplanes, the industry has to get rid of that mask mandate. People hate masks. I can promise you, no matter how much piety there is out there on your Twitter feed and everybody's got a picture of themselves in a mask, people hate masks, don't like to look at people with masks, and don't like to wear them. So the airlines have to fix that problem. I'm not worried about the theaters. On the other hand, if they make you socially distance in the theaters, then that'll be ridiculous. You know, you go to the movies with your true love, and you have to sit 6 feet apart. That's never going to work. But honestly, if you look at consumer habits over the last several weeks, the beaches are full. Everybody's desperate to get out and about. People are ready to go to restaurants again. I don't think it's going to be really a problem. However, in a macroeconomic sense, I think once all of this settles and you can look back at the velocity of money over 2020, you will see a huge tank in the velocity of money. People are holding cash. They're unwilling to spend their money. They didn't have enough savings going into this. I mean, people could barely pay rent in April and then barely pay rent in May. And it was really a disaster. So people are very interested in increasing their savings. That's going to put downward pressure on the velocity of money and actually save us from a hyperinflation we might otherwise have given the level of money creation. So that's all good. So I'm expecting that velocity change is going to persist over the next year. A lot of business has been destroyed here. And you notice that the big businesses got bigger, right? We're now talking about Jeff Bezos being a trillionaire in a few years, you know? So Amazon benefited, Walmart benefited, all these, the big box retailers benefited, but small business has been creamed and hammered. And they're having a hard time attracting employees back now because the unemployment benefits are so outrageously generous that there's no reason for people to go back to work. A lot of people just like, I'm not this way, but a lot of people really like to sit home and couch surf, you know? And with Congress's outrageous level of unemployment insurance, it's going to be very difficult for anybody to attract workers. The other problem is that I don't think most Americans had any idea how easy it would be for their governors to shut down business. You know, if you own a restaurant and it could just be shut down in the blink of an eye because of the presence of a virus, that's not a lot of security for the future. And there's no particular reason even to go into that industry. So all these so-called non-essential industries are going to be suffering for a very long time because there's not going to be investors. Small business owners are going to be very reluctant to start businesses. They're having a hard time recruiting employees. So who benefits from this? Only the big people, only Google and the big media companies and Amazon and that sort of thing. Small business is going to be struggling for quite some time.
Such a good point that you bring up, that the fundamental business, the fundamental Main Street that should be what drives the stock market is suffering.
Yeah.
But that's not what happens. There's a big disconnect between Wall Street and Main Street.
Oh, sure.
And I couldn't imagine the thought of even opening up a restaurant in downtown Austin when we don't know the rules of tomorrow. We don't know if they're going to be encouraging rioters to destroy my business and then, you know, one day shutting me down and who knows what the rules are going to be tomorrow. But yet the stock market is going up.
And then you don't even know, like, what's the basis on which these governors are making these decisions? They claim to be looking at the data, but the data is all gibberish. I mean, it's all inaccurate. We don't have any idea, actually, how widespread this coronavirus is, even now, because we didn't have testing. And to get a test, you have to go to the hospital. So it could be vast. Look, there could have been millions of people with coronavirus in January, and we just didn't know it. And we still don't know it. It's going to be years before we can come anywhere close to calculating an infection fatality rate on this thing. So you can't trust the data. You can't even trust death rates anymore because there's a strong incentive now for every person who dies with a COVID-19 to classify as a COVID death. And we know that's not good science, but that's where the money is, right? If you get classified as COVID sick, then government covers all the medical bills for you. So hospitals are very interested and incentivized then to call everybody a COVID patient and every death a COVID death. So yeah, there's the lies are everywhere. It's unbelievable, and people have lost trust in experts. I think that's generally a good thing, and trust in the media. Actually, I saw a poll this morning that 60% of Americans think that the media favors lockdowns because they want to hurt Trump's economy.
Yeah. Yeah. I mean, have you heard anything about the 2020 influenza virus?
No. What do you mean? No, no. There's a flu out there too. Yeah, right.
No,
Yeah,
that's what I'm just joking. I mean, nobody
yeah.
knows about it. Like, there's this, what happened to the regular flu
Oh, it's
this
just
year?
yeah. I don't know,
People
and I
getting
can
it?
tell.
I don't even know.
Yeah, and there will not be a vaccine for the COVID-19. I mean, they can pretend like they're working on one, but vaccines can take 10 or 15 years. And by the way, this should only be used for extremely deadly, scary diseases that affect the general population. That is not the coronavirus. We've known since early January that this is particularly wicked for people with pre-existing comorbidities who are over the age of 70. I mean, we've known this for months. So there's absolutely zero reason for a vaccine of this thing any more than, and we don't have any evidence that anybody's be able to come up with one either. You don't have a vaccine for the common cold. We don't have a vaccine for AIDS. So this is pointless. And I can tell you this, if a government comes up with a vaccine and tells you to take it, well, let's just say I'm not going to be the first in line for it.
All right, Jeffrey, good word. Jeffrey Tucker, everyone. Jeffrey, thanks for coming on Crush the Street. If people want to learn more about you, your research, your work, please let them know where they can go and what they can expect to find.
The American Institute for Economic Research publishes every single day. We probably have 3, 4, 5 articles that are on economics and history and philosophy and policy, and that's found at aier.org. You can sign up for our email list, and you'll see some of the most serious, well-researched content on economics and financial markets that you can get anywhere on the planet. So I welcome all of the listeners to go there now and do that.
Thank you so much for coming on the show with me today, sir.
It's my pleasure. Thank you for having me.